Very quickly, let's spend about 2-3 minutes to talk about the measures being put in place to get the banks to start lending again. Of course, we've gone through the cycle of fear thy neighbor in the banking industry, and later fear thy customer, not know your customer. But this time, things have changed from know your customer to fear thy customer. How do we get this fear thy customer out and back to KYC, and for the banks to trust themselves, for the investors to trust the banks, because trust was the first casualty where we're coming from?
No, I think that was okay. There was an overreaction. Right now, we run the risk of over-regulating and being high-handed. You know, tenure of CEOs, all sorts of things are happening. I think that's an overkill. Enforce the regulations you have. Central bank goes examination. If you find any infractions, zero tolerance, deal with it.
Right there and
but
then.
You don't, you know, right there and then. Early warning signals. Collaborate with the banks to achieve this objective. There's too much presence of regulatory presence in the market. Regulatory presence in the market itself creates distortions.
It creates too much fear.
Yeah, and distortions.
But the guys who are on the street, on Broad Street, have a very good record of doing bad things.
Because they were allowed to do it because the regulatory process broke down.
But the regulators weren't there.
No, the regulators were there, but they were compromised. So why don't you first sanitize the regulatory community? I've not heard of anybody being penalized in the regulatory community. How could all of this have happened? We've heard of the banks and everybody being. Where were the regulators? I've just told you now that we approved a budget, and a week later or 2 weeks later, who was responsible? Somebody should be asked the question. So the same enthusiasm in which we go after the bad boys in the private sector, we should also look inwards to see how those guys who are giving us bad advice, whose judgment we have depended on to make those decisions, should be looked at again.
You think the way to achieve that is to set up a committee to draft a code of good behavior for market regulators themselves?
No, it's a waste of time. We already have this. Just enforce what you have. You're trying to put more rules when you have not even enforced the other ones.
No, the regulators are putting out rules to regulate the market operators.
No, but they don't need regulations.
Comes up and says good corporate governance for the regulators themselves.
No, but there's no corporate governance there. The question is just do what you have to do. Somebody is supervising them. Whoever supervises the regulators should come out and tell them this is what they're doing, and if they're not doing their job, they go. I mean, there are too many committees. Just too many committees. Let's get to work.
Let's get back to this issue. How do we get the banks to start lending again? Sorry, we drifted.
Yes. No, the banks, they would lend. What I'm saying that part of the process, part of the trauma out there is that if every 2 weeks you're going to have regulators coming to look at your books and all that, you're not going to settle down. You are responding to regulatory incursion rather than doing your business. Look, come do your examination, follow up, ask for the provision. The auditors will come and all of that. Let's get back to normal business. Right? We can't run a system where there's so much intervention. The more you intervene,
police presence.
Yeah, no. Before you know it, you have a Gestapo mentality.
How do you think we should resolve these rescued banks? It's getting to almost to a year right now, whether we like it or not.
We've got to sell them, or if possible, give them out. What have you? Whether we like it or not, the banks are in such bad shape that the central bank will have to subsidize whoever is going to buy them.
But definitely, there won't be any liquidation. Liquidation has its own implication. If you are going to liquidate, you should have liquidated on August 13, not after you've intervened the way you have. So it's after that's after the event. But it's happened like that before. No, in the past. No, in the past we liquidate first, and they sell it for ₦1 to the NDIC. Certain times at which some funds were given in the 80s and 90s and,
to support the banks.
Yeah, to support some of the banks, and
you see,
they're still taken out of the system.
No, what you do.
Liquidation option is not.
No, it's one of them. There are distress resolution options for which there are so many things, but there's a moral hazard that exists that when you intervene in a particular way, you actually, in a perverse way, you actually create an atmosphere that people know that somebody is going to come to their support. And that's why the book Too Big to Fail has been written, that what has happened to AIJ and others. So there are so many variables at play, but one of the worst options you have is actual liquidation, because the taxpayer is going to pay heavily. Now the taxpayer is going to pay. Whether you like it or not, taxpayer is going to pay some money. But the earlier we resolve this issue of these banks under administration, the better for the economy and the better for the system. Central Bank can now go and focus purely on the things which it has to do, which is the regulation of the banks on one hand, and then monetary policy on the other. But it has to be resolved. The longer it drags on, the worse. So the AMC law has to be signed, so that at least some of the assets can be bought, not all of them, the ones that are quoted. So it's a Panzer action, whereby on one hand the AMC law is passed, the other hand people are making provision, the culture of immunity is removed, Central Bank is regulating and enforcing properly, the SEC is getting rid of all the shenanigans in the brokerage community. You see, all of a sudden the confidence will be restored, stability will be restored, and the financial services sector will drive the economy, and, rather than the economy driving that sector.
Well, you think that should be Lamido's next 365 days?
I think his job is cut out for him. It's 365 days, or the next, to the end of his term, he's going to have to, he's going to have to pursue monetary policy, right? He's going to shift from the feedback rule to the discretionary rule, right? He's going to internationalize our markets, and he's going to make sure that uses technology, the e-payment system and all of that, and the velocity of circulation, inflation management. I think it's going to be very, very interesting, and it's going to collaborate with the private operators, the research analysts and all that, to achieve this objective.
So rounding off this discussion over the past 50 minutes or thereabout, we go back to your initial comment, which you gave this day newspaper 2 days ago, that the question people should ask about this banking reform is whether the Nigerian banking industry was well positioned before the CBN intervention or not. You stand by that statement?
Yes, it was not. What we had was a fractured system. Somebody came in. You didn't need to be a rocket scientist to identify that there were problems there. The steps taken to correct it, we have differences. I think that the sequence should have been different. I think that to some extent there was an overkill in certain respect, but definitely there was need for surgical intervention.
You said it should be right sizing. That's
yes,
what you said.
That's right.
That's what you told him.
And that is what he has done in certain respect. But the sequence is a different story. But what he had, first of all, diagnosis is 50% of the solution. He diagnosed correctly, right? Prognosis is different. Okay. So now let's go around. The outcome we have seen, some of it is good, some of it is not so good. Let's fix the part of it that is not so good. Sell these banks, move on to the right things, and make our markets competitive.
Well, thank you very much for being here on the program.
Thank you.
Bismark, the Chief Executive Officer of Financial Derivatives, is an economist. He's also part of the policy dialogue at the Lagos Business School. You want to listen to him, be part of that on a monthly basis. That's about all we got time for today's edition of the program, Business Morning. Tomorrow is Friday, the 4th of June. Lamido is 365 days in office tomorrow. Perhaps with the central bank and his office, there could be some cake cutting, perhaps if there's time for that, but things are still a bit tasty out there. We'll find out what central bank will do to celebrate Lamido's 1 year in office. So, join the debates, get it to our email address. You want to follow the discussions on the web as well, marketnewstv.com. Read more about all the issues regarding the past 365 and what happens in the next 12 months. I am Boason. Do have a great day. We'll see you tomorrow at the same time, 10 o'clock here on Channels Television. Bye for now.